Hello everybody, in today's video we'll be talking about the 100% win rate strategy, and I'm rolling up my sleeves here because it's a fun one. And before we get started, it's not actually 100% just because of the nature of how we're entering positions, but we can say with 100% certainty what will happen, where price is going when we see this condition. And the condition can change, so it must stay true, which is the important part. What we say is everything always confirms or negates. So when we're looking at price action, if you take a reversal, let's say a 2-2 reversal, this reversal will either confirm, continue, or it will negate. Where, example, this would be confirming, keeps going. Negating would be like this, reversal against. So everything either confirms direction or negates direction. And this is key with inside bars, because if we see a reversal and we buy it, then we go inside like this inside bar will either confirm direction or negate direction. So how can it confirm or negate? It can confirm like this. Inside bar, continuation, confirms. It can negate like this. Goes up, rejects by going 2 up in red, boom, negates. It can also negate by going like this. Inside bar reversal down. So we either confirm continuation, negate as an outside bar, or negate as a bar to the downside. The last one would be, we can also see stuff like this. So let's say we have a reversal down, a reversal back up, inside bar. We could see gap down buy. Does that confirm what's happening? Yes. Gap down buy. It's a buy. What was it before? It was a buy down here. We knew that. So price is always confirming or negating. The key is understanding the broadening formations, right? Gap down buy, gap up sell, as well as understanding that they happen more than once. So if we have a bar and it confirms, and then it starts coming back like this, negate. We need to be very aware of this because this can happen. And I believe I may have already showed you this one. We got a pan W on the day. Do you think anyone, right, if we're looking at this bar, does this look like a bullish chart? Yeah, everyone would say that looks pretty bullish to me, right? It's going up. Beautiful. Is this exhaustion risk at 206.88? Just about. Yes. Right, it's 206.74. Gap up into exhaustion risk. Is that a gap up sell? Yes. Is this an inside bar? Yes. So we saw a 2-2 buy and we bought this. 2 continuation, hold. Inside bar, hold. Gap up, sell, get out and flip short. Boom, boom, takes everyone out. So you can see, very, very key to understand. Things do change, but given conditions don't change, we know what's happening. When they change, we also know what's happening. It's just changing what we were doing. So it's okay to be wrong, right? It's like gap up, gap up. It's like, I want to see this go. I want to see it go. And then it flips red. Get me out. I was wrong. And then everyone gets out because everyone was wrong. We're okay with being wrong. We just need to know when we're wrong, when this goes red or when price reverses. Now, the simultaneous break is a very powerful condition because we are aligning algorithmic trading across the whole market. And we can identify what a buy and a sell looks like for sure. Certainty. So what does it look like? It looks like when we break a 2 in the same direction, or a 3 as well, but ideally a 2 across the whole market. And this can occur as a continuation or reversal, but the condition is simple. Notice SPY today, right? Just going off the gaps, not even thinking about anything else. Is it a gap down buy? Yes. New lows to these guys, goes green here. That's a gap down buy. You're in. $4, not bad. And if you had the low of day stop, 89 cents for $4, that's a good stuff. If we go to Qs, is this gap down buy? Yes. Did we gap into these new lows? Yes. Did it go green? Yes. Gap down buy. Boom. Up they go. What about Dow Jones? Did this gap down on the 60? It did. Is that a buy? Yes. Risking 16 cents? Boom. $5. What about IWM? Did this gap down? No, this gapped up. So the whole market gaps down. IWM gaps up. That's got to be stronger. Anytime this was green, is this a kicking pattern above here? It is. There's your kicking 60. Boom. So IWM was stronger because it opened 2 up versus Dow Jones was 2 down. That's weaker than IWM. SPY opens 2 down. That's weaker than IWM. Qs 2 down. That's weaker than IWM. So we can gauge relative strength and weakness across at least 2 assets based on the scenarios. We can also identify the simultaneous break. So we had simultaneous gap down buy across 3 of the 4, but where was the simultaneous break? On the second 60 of the day, Q's reversed, 2-2 reversal. That's a good thing to know. SPY on the second 60 minute of the day, reversed, 2-2 reversal. So are they now buying the SPY and the Qs? Does the buyer now have control? Given that price has no 2s down, it does not reverse? Yes. Dow Jones, 2-up continuation right here. So are they still buying the Dow Jones? Yes. Are they buying this more aggressively? Yes. Because it was already going up the first 60 of the day. So yes, it has to be more aggressive. IWM, does this break a continuation? Yes. Are they buying aggressively? Yes. Are they still buying aggressively? Yes. So notice, second 60 of the day, if we just go replay mode to really zone in here and see this. The second we see all 4 of these start taking the previous 60 high, that is simultaneous break, IWM, simultaneous break, Dow Jones, simultaneous break, SPY, simultaneous break, Qs. They all broke a 2 in the same direction. What does this tell us about price action? 70% of the market is traded by algorithms. They have to be told 4 things. What are you going to trade? How are you going to trade it, buy or sell? How are you going to buy or sell? Aggressively or not aggressively? When are you going to do it? The reversal, the simultaneous break, tells you they're doing it right now because they all just broke a continuation / reversal. It tells you what they're trading. They're trading the Qs, the SPY, the Dow, and IWM. It tells you how they're trading it. They're buying. It tells you how they're buying aggressively because they're buying above the morning highs. Therefore, we have the recipe to know where the algorithms are. They are buying across the whole market as of the gap down buy and the second 60 of the day reversal / continuation across all 4 indexes. Why is this important? Because that's for certain going to work every time. And you may not believe me, but when you have the condition where the whole market's reversed, it's going to work. Because think this way. Let's say price has been going down for the past week. Then the whole market reverses. And we can just, make a picture for you, right? On a 60-minute chart, maybe it looks like this. Right? Let's say this was last week's trading. All right, the new week opens. Let's say the new week opens and we go like this. What's about to happen? Potential 2-2 reversal. If that reversal happens, how much of the market would we have? If it's a simultaneous break, we'd have the whole market going up. Are we pairing aggressive buyers across the whole market with losing traders in this range? Yes. Is that going to work every time? Yes. Because if everything reverses and we see this buyer actually show up, it's like boom, boom, everyone's got to get out. So what does this look like? Well, we had some examples in last week's trading that confirmed this week, and they looked like this. And I'm going to show you guys what we said in the weekend vid, because this will also allow you to start using the free stuff we do put out to make money. So we saw this. XRT last week. Did this break 2 up? Yes. The airlines, jets, ETF. Did this break 2 up off a hammer? Yes. Transports. Did this break? Yes. Boom. So all of these reversed last week. That's a buy. What else reversed last week? OIH reversed last week. That was a buy. Semis, that reversed last week. Qs reversed last week. SPY reversed last week. Dow reversed last week. IWM reversed last week. They're all a buy. The whole market, SPY, Qs, Dow, and IWM, semis, right? And then OIH, retail, airlines, transports, all of them are a buy. The other thing we can see is the VIX, which is volatility, or you could think of it as fear. The fear of the market going down reversed last week. So they reversed. Now they're not scared of the market going down and they're buying everything. What's going to happen? All-time highs. And we knew that. Let me show you. So before I play this is a 5-minute video we put out 10 days ago telling you exactly what you would want to do. Hey everybody, welcome to the weekend vid. Normally it's Sarah doing this, but we're going to kind of cruise on through this. We're going to keep it simple. What we saw last week was SPY went inside week to the downside, which Sarah would have mentioned. And you'll see that takes last month's lows. So the question is, do we confirm that or negate that? Each weekly open will confirm or negate. So if we open and we're green, they're attempting to become a reversal to the upside. All right, first piece of evidence. What did we say? If we open the week and we are green, they're attempting what? A reversal to the upside. Anytime above 662.62, we pointed to this. Boom, $12. Can you make money doing that? Yes. How is that going to happen? 30-minute and 60-minute breaks, right? Or you can just buy the weekly open, put your stop against the lows. You might have to do it a few times, but that's how we play based on continuity. We open and we're red, they're attempting to continue. We'll likely open inside week, so we want to know that. As far as Monday is concerned, we'd be a little bit closer to going reversal day up, but again, we're probably going to open inside. The next thing we did is we looked to the daily and we said we would be closer a little bit to a 2-2 reversal day up. How do we play that? We buy it, and then if no reversal against, we hold. Boom, there's your winning trade. We're just handing it out here. Trade consolidations if we don't have to, right? And we have a short week next week, so that does matter. As far as where you would want to be a buyer, it's really simple. We want to look for things that are closer to reversing. So if we go to the weekly scanner here, we can scan 2 down in green, which will be stronger than the SPY. As we look at the SPY, you can see at this point, we are 2.5% away from last week's highs. Whereas if we go to the top one on this list, TMO, the healthcares, you'll see TMO is only 0.4% away from triggering a reversal. So this is something we want to know about into next week. And since it's a short week, we don't want to trade anything inside bar. We need to have 2s in our favor. So that being said, healthcares, right? Maybe those if they continue buying. Staples, closer reversing up as well. And you see we jump over the sectors on the weekly. We'll notice communications also a little bit closer to reversing with, OIH, although the other energies are still a little weaker. So maybe a lot of inside weeks there. Retail, you'll see the hammer on the week. The airlines, hammer on the week. The transports, hammer on the week. Materials, hammer on the week. All right, so we did rapid fire a few of those, but come look. Did OIH reverse? Yes. Boom, winning position. That's what it looks like when you win. Yep. Retail, did that reverse? Yep. Boom, winning position. Jets, did that reverse? Boom, winning position. Transports, boom, winning position. So they bought retail stocks, airlines, transports. What is that? Well, it's the holiday season. What's everyone doing? They're buying airline tickets. They're riding trains and buses. Any other transports, a lot of airlines are in there. They also have shipping companies in the transports, shipping all the gifts that people are buying around the globe, right? We also have materials. Did they buy that? Yes, they did. So they bought boom, boom, boom. What about communications? Yep. Boom. Did they buy that? Yep. Right? And then everything else, all the indexes too. So we knew these would be the stronger ones, and they are, right? Retail went 80 to 85, which is, a little over a 5% gain, maybe like 7%. SPY went 660 to 680. It's like, that's a couple percent. It's like 2%. So this went further than SPY just based on percentage points. Therefore, we knew what we were talking about because we speak only in what we know to be true about price. And I really want to get that across to you. Whenever I say something, it's just what we know, right? Can what we know change? Yeah. Opens can change. We can reclaim a previous trigger and it didn't work. You can go outside, right? These could have broken and went outside week to the downside. Sure. We have stops for that reason. Sometimes we don't get it right. But when we are right, we are really, really right. And we know, right? It's like, we know they're going to go buy these. We said, who are you going to go buy? Things closer to reversing. We're not going to buy inside week SPY, although you can. We're going to buy the things reversing. It's that simple. And then we do it as a simultaneous break. We buy OIH and then we buy XRT, Jets, IYT. We buy materials. We can buy the SPY and Qs. We can buy all of these across our account. So you can put 100% of our account into each of these, right? We're going to split it up. Maybe you have 5% of your account here, 5% here, 5% here, 5% here, 10% SPY, 10% Qs, 10% Dow, 10% IBM. You buy them all. Whichever ones don't reverse, hold. Add. Whichever ones reverse, get me out. And that's it. So with the simultaneous break, the other thing we have is since we have such high evidence, we can remove that tight stop and widen it. So when SPY is 2-2 simultaneous break day, which our indicator will show here, note, boom, 3 out of 4 reversed. Okay, that's a buy. Simultaneous break. 3 out of the 4 reversed. The market's going up. Price will be aggregating on the offer. Anyone short in here, they're going to have to close shorts by taking the offer, which will speed this up. Boom. That's what they do. So we can buy that with a wider stop. And we could say, I'm going to buy the break. Maybe we're not going to give it 14 points, right? But maybe we give it 5 points. Once this closes out, we then tighten our stop to low of day. Then once this next day closes out, we tighten our stop to even to this low of day. And then we walk our stop from here to here to here, gap down buy, maybe we hold. Goes up, we can still hold. Goes up, we can still hold. As long as we're not in a losing position, we can hold that. The best winners won't reverse. So when we look at the airlines, like United Airlines, for example, 2-2 reversal, has it reversed the week? No, that's a good winner. That's it. 4 out of 4, you can see. Nice. What if we go to Jets, right? 2-2 reversal, did it reverse the week? No. And you can see, maybe you have this wider stop and then you tighten the stop up as that works. Once it goes to target 1, just jam your stop in there. It's like, it's good. Boom, there's your exhaustion risk. And that's how easy it can be. And the thing is if you are playing simultaneous breaks, you will be in the big moves because the big moves occur across the whole market. Let me show you an example. And we have examples for days because we've been doing this for over 5 years, but you can see SPY, Qs, Dow, IWM, simultaneous break, still good. 664.20 or something about, right at this break. Still good. So if we go to SPY and we'll take this tweet. Do we know how to hold simultaneous breaks? Yes, right? Until they reverse. So the one from this morning, still good, as we call it. Right here, simultaneous break, boom, buy, hold, gap up, sell, reduce some. 2-2 reversal, buy more, boom, gap down, buy, right? And then gap up, sell. Now they start bringing it back in. So the key is, can you just hold given no reversal against with simultaneous breaks? Because if you do that, eventually you will make the gigantic winner. And this is not something we just started doing. This is something we've been doing for many years. And Rob preached this. He said, this is like the bread and butter of why the strat works and how we're going to make a lot of money doing this. And what we're creating right now is a way to track this. Currently, we're just using futures, but we'll be able to note on the futures when they occur. And these alerts do get sent out in real time. This is not something we have for you guys right now, but in the future, we will be sharing this. It is likely to be a product, so it will not be free. And I think we've given you so much. Hopefully you guys don't mind that, because this is not my project. This is actually a friend of mine that we're collaborating on here, but this will be added and will be something we share to you guys. But before this happens and we share it to you guys, because we will be able to track, this is a cool thing. We're going to be able to track the positions and how big of a win they are. So it's going to do pretty much everything for you. Before that, you have to understand why, right? Then you have to understand what it looks like. And then you have to see it play out a few times. Because if you just go and look at one and you're like, it failed, and then you never look at another one, never going to work, right? You need to go look at 100 of these. So if you want to, you can actually open up multiple charts and go back test it. Or go in through my weekend videos, my monthly videos, and you're going to see things like when we called the bottom on SPY here. Right here. Notice 3 out of 4 simultaneous break on the month. Boom, up they go. That's all we're trying to do. So hopefully you guys enjoyed this. Again, with wider stops does come wider and bigger losses. What I highly suggest is if you're going to do this, these simultaneous breaks have some time to set up. This 60-minute break set up in 1 hour. So what you're going to do, we are a team here. We are helping everyone all at once. You're going to go in the chat and you're going to go, hey, Alex, I see a potential simultaneous break with SPY QQQ as a 2 down, 2 up reversal. And then I'll go and say, hey, that looks great. Just make sure to not exit before it reverses and keep a wider stop because it will have more evidence. And then we'll see SPY and Qs just broke. Dow or DIA and IWM have not broke yet. So we do not have full evidence yet. And then we'll be like, Dow just broke. Now we have 3 out of 4 breaking. That's enough evidence where we would like to hold that given no reversal. And then we'd say IWM just broke. We have full evidence. It is going higher until a reversal against. Hold all winning positions on the simultaneous break until reversal against. Notice until reversal, until reversal, until reversal. We're not a fortune teller. I can say they are going to be buying simultaneous break. I can say the simultaneous break has a magnitude to take, whatever price out. If we go to SPY today, We have a magnitude on SPY to at least try and go up into 683.96, which is yesterday's highs. And then we don't know. It may just keep going because we may trigger the month. And then we have simultaneous break month, SPY, Qs, Dow Jones, maybe, and then IBM right here. IBM is the first one to break. So that has to be stronger. So you can see how this plays out. You'll see the last one, how that played out. And notice this last one, you had a lot more range to come back through, 20 something percent. So that's a lot better, but we'll see. Hopefully this meets you guys kindly. If you have any questions, feel free to drop them in the chat, but I want you guys to start saying, you know, this is setting up, and then ticker, time frame, setup. Is it 2 down in green, or is it 2 up in red? Is it a hammer or a shooter? Right? And if you don't know what those are, hammers and shooters, they just look like hammers. So like this here, this looks like a hammer because you'd hold, your hands would go down here and then that's the top of the hammer, right? Shooter is the opposite of that. So a shooter looks like the opposite. Long upper wick, small little head here. That's a shooter. It's like an upside down hammer. So we like those. We like adding those in with our 2-2 reversals because they increase the win rate. You can see hammer here on the IBM, boom. Hammer here on the IBM. We'll see if it can go. But that's it. Just really, guys, I want you to start posting your setups, asking questions, being like, is this, should I trade this? And we are there to let you know. So tag me, tag Sarah, and everyone else in the chat can also confirm or negate your analysis. Someone posts a setup and you're like, well, you know, it's a gap down. Would you really, do you want to sell the gap down? It's already exhaustion risk. And then you can be like, oh, I'm not going to sell. I'm just going to wait. Perfect, right? It's a gap up. We have a potential 60 back down. Do we want to take that? And everyone's like, yep, all together. So hopefully that makes sense. But adios, everyone. Again, let me know if you have questions, and I'll see you in the next.